Good afternoon, everybody. In just a few moments, we're going to play a few clips from today's CNBC halftime report. Once the news is over, stay tuned because we're going to dive right into the charts and take a look at some of the technicals of the stocks that featured in today's halftime report. We're going to take a look at some of the key areas of support and resistance and provide an analysis to see if the technicals actually back up with what the CNBC guests are saying. Stay tuned.
Carl, thanks. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. Food for the bulls. The CPI hits in line, yields down, CoreWeave surging after earnings. We trade the markets with the investment committee. Joining me for the hour today, Joe Terranova, Shannon Sakosha, Brian Belsky, Bryn Talkington. Check the markets here. Green across the board today, so a little bit of relief, obviously, after the CPI print. Certainly the AI bulls getting a nice lift from Supermicro and CoreWeave, the beats, the raises, etc. And Ed Yardeni goes to 8,400 now on the S&P. 8,250 was the prior target, which at the time he said could be a little conservative. All right, so the words, then the action. So he raises it. Says, quote, "We've never seen consensus earnings expectations rise so quickly for the current and coming years as they have since mid-2025. The result has been an earnings-led melt-up in the stock market to record highs." That's where we find ourselves. There's no reason to think that that's going to change as long as the earnings picture remains what it is.
No, and congratulations to Ed on calling the 20s for exactly what it is. It is the roaring 20s, specifically attributable to the earnings growth. Now, Ed is the highest on the street. If you look at the S&P targets, the actual consensus price is 78.45. But we're looking now at taking profit margins towards 17%, which is absolutely staggering if you think about where they were just 5-6 years ago, kind of wallowing around 10%. The earnings growth is the driving force for sure. Ed right now is the highest on the street. And I think what we will benefit from is continued participation as we move higher from the systematic funds. We're kind of sitting in place right now off of this 3% gain that we've had in the month of August, really strong out of the gates. But I'll tell you what, we break out above that August 5th 77.93 high. I expect systematic to engage further and move the market towards 8,000.
Okay, so I mentioned, obviously you get the news that you really needed, Bryn, today. Does the Yardeni target sound reasonable now to you? Because I said yesterday, I think 8,000 is the floor. It feels like it from the street, at least. Everybody's gotten now to at least 8,000, or certainly most people are getting there. And now he ups the ante at 8,400 because of this FEMO, right? Not FOMO, FEMO. It's the earnings-led momentum.
So I typically, ignore year-end price targets. That being said, Ed's been doing this for decades. He has a very good track record. And so I think directionally what he's saying makes so much sense, because you also have to think about how the construct of the S&P and the NASDAQ, or for the S&P for earnings, has changed so much. So yes, Nvidia is still the #1 holding in the S&P, but now Broadcom and Micron are also in the top 10. Obviously, Broadcom's been there for a minute, but Micron's now broken to, I think it's like #7 or 8 position. And those earnings from those three companies are going to continue just to be monster. And so I think if you are looking at earnings from these specific companies, especially the Micron and Nvidia, you can math out very easily why his number at 8,400 sounds plausible. And so I do think investors do need to understand that huge shift of the constitution of the S&P and the NASDAQ has changed, which is going to continue to push those earnings growth numbers higher.
Shan, what do we think about this market?
Well, I mean, the crazy thing, right, is that the S&P 500 is actually underperforming other global equity markets. And so I think if you look at the tech PE ratio, we've seen that compress pretty markedly. We're seeing the opportunity for this pivot, if you will, in terms of the next phase of AI. But I think it's most important to kind of counter some of the enthusiasm with the fact that many are still concerned about the recent unwind in memory. Was that fundamental? Feels more technical to us, certainly the degrossing. The reality is, too, you also have the news from Nvidia about these memoranda of understanding. That clearly is indicating that there is going to be a wider participation. We've seen it in the credit markets already in terms of funding investment, this issuance, increase in investment grade issuance. You're seeing it now utilizing the alternative private equity managers, private credit managers to also fund this growth. The bottom line is that all of this is underlying the economic momentum that we have globally. We're no longer, especially here in the U.S., Scott, our economy is not based on what's happening with the consumer. And so all of these concerns about the labor market and inflation and the Fed, the reality is that the tenor of economic growth has changed in the United States, and the companies that are performing well from an earnings perspective are benefiting from that and are likely to continue to benefit from that, even if there are pockets of weakness in parts of the consumer market, for instance.
Big week for the AI bulls, undoubtedly, right? The Nvidia financing news. No money to be seen yet, obviously, but the announcement enough speaks to the environment and the expected demand that's going to be there. CoreWeave blows it out, stocks ripping. Supermicro gives a good guide, stocks higher. So this has been a week of AI trade validation in many respects.
It's been about validation. It's been about the messaging and how they're doing it. Remember, people were worried about how and why companies like Oracle and Microsoft going out into the private sector and gaining debt. This consortium, even though it's still not completely tied together, this consortium, in terms of how Nvidia put this together, number one, and number two, how they communicated it, Scott. We need information in the market, and they did a great job talking about how that's number one. Number two, in terms of the tech trade, we've said for 10 years that tech is becoming the consumer staples of the U.S., period. And so earnings have become excessively stable, but Ed nailed it. And we talked about this on the show yesterday. In the second quarter, we've never seen in the history of watching earnings revisions for well over 30 years, we've never seen a revision of earnings like that. And when you see that, that is real. That is real. And so what's going to end up happening is you're going to continue to see these types of revisions over the next 4 to 6 quarters, and 8,400 is clearly in the way.
I mean, Bespoke today talks about the beat rate for tech, the highest, 85.1%. One of every 100 tech stocks that have reported, 85 of them have beaten expectations. You have had, according to Bank of America, who watches the flows of what their institutional clients are doing, tech's second biggest inflow ever. So driven by hedge fund clients. Remember, we've been talking a lot about the degrossing from hedge funds. There's been a lot of deleveraging. The positioning environment, the field, if you will, is cleaner now. Tech saw the second biggest inflow week of all time. Money's going where they think they can get a nice reward. There's no doubt about that. This trade seems to be back in a big way. If it wasn't gone, it was parts of it at least were just taking a rest. Now the chips and the momentum trade, they were taking more than a rest. They had to puke up a little bit before they felt good enough to get back in the party.
So we had this 19% move from the end of March through June 2nd. That took you up to 76.20, an all-time high. And then the market, to your point, Scott, it kind of had this consolidation to a lower trade as you moved through the month of June. We're now rebuilding positioning once again. The catalyst is clearly earnings. And I think, Scott, we're getting in front of Nvidia earnings. I think if you...
Exactly 2 weeks from today.
Exactly 2 weeks from today. So if I can, let me just walk you through why I think we're getting in front of it. First of all, analyst community, 96% buy rating. 303 price target. Here's what happens with the revenue growth. The revenue growth reaccelerates. Remember we were hearing about revenue growth moderating? You're coming in, the consensus number is 96%. That's the best figure in nearly 12 months for Nvidia. Now you're going to see earnings growth, 114%. You're talking about free cash flow generation that's going to come in at $47 billion. Next quarter, they're going to guide to $100 billion in revenue. Think about how staggering that ultimately is. So I think the market is getting in front of what I think universally people believe is going to be a really good quarter. Be a little bit careful with that on the other side of earnings.
I was exactly thinking
Be a little careful with that on the other side of earnings, but I think we are working ourselves up towards that that previous high at 236 for sure that we had in May.
Bryn, and Goldman says it's going to 285. They reiterate their Nvidia buy, but Joe makes, I think, a really great point that we just came off one of the best weeks that this stock has had in an awfully long time. It's been on a nice run here, okay? You can look at it over, that's month to date. Thank you, guys. That's a good chart. That shows exactly what I'm talking about. Therein lies one of the problems, okay? So expectations are elevated, too. Watch out on the other side of earnings in a couple of weeks.
I mean, the growth of this company, though, is so ginormous. that I think it's been a huge laggard with the growth, which tells you it's like people just still don't believe this growth is going to continue. But to Joe, walking through those revenue and earnings numbers, they are, and to do $100 billion next year is amazing. And so the stock continues to get cheaper. I think it's just been consolidating, right? What do we have, a $5 trillion market cap? But this stock is cheap. It should be at 280. 220 is at 223 is inexpensive. So we'll see if it can break through that technical ceiling around 230s. When it does, I do think it will. I think it's off to the races. But that 230 definitely is a ceiling that it needs to pierce through. But it's been an underperformer relative to the Microns. A bunch of different stocks year to date. And so I do think there's an opportunity for catch up, especially with Elon saying with SpaceX that they're pushing all of their chips in with Nvidia. That's a huge, huge new customer that was not underwritten a month ago.
You make a good reminder to people, too, about the valuation. Let's show that again, if we could, because the stock, we've been saying for the last few weeks, the stock is the cheapest that it's been. I don't know, what was that, since 08? In 7 years? I'm sorry, in 7 years. I was thinking 2007, 2008, yeah. But in 7 years. So therein tells its own story, right? Of a stock that earnings expectations continue to go up and the stock continues to get cheaper. There's other news today as well. So Morgan Stanley comments on Meta's new Muse Spark, re-entering the open weight game through Muse Spark, reads positively for the ecosystem. So that's a story that we continue to follow. Google getting its first crack today at the iPhone. That's interesting, a new Pixel lineup. We're following that. There's the SpaceX news today of the target getting cut. The stock has been teetering right around the 135 level that it had gone out at. It got below that, now it's back, at least above it there. I want to move and talk about a stock that reports earnings tonight. We don't talk about it all that often. It is Cisco. Brian Belsky, you want it?
Yeah, we do. We've owned it for about 10 years, Scott. And this is a company that has really benefited from the Russell 1000 value technology sector being a place with respect to where momentum has been, especially when Micron was in the sector. So this is also a name that value investors have been able to buy, not only for the cash flow and the consistent earnings, but this stock throws off a dividend. So now that they've talked more and more the last couple, 3 quarters about their AI development, this stock has a lot of fundamental momentum behind it.
Why has this stock done so well?
I think 2 things. Number one, it is obviously participating in AI, but it's participating in AI through optical. And you see today...
Oh, look, Lumentum.
So let's talk about how strong the optical story is. It is Lumentum. And
Corning?
You'll see this strong earnings. Corning is the traditional way. It's more of a reasonable valuation, and that's how I'm playing the trade. You could look at Lumentum. You could look at Coherent. Coherent's up 59% so far month to date. Applied Opto, if we could show that, that's up 84% year to date. So Cisco is there. It's participating in that optical component, which is critically important because years ago, everyone was saying in AI infrastructure, what do you need? You need copper. Everyone said own copper. Well, now optical is replacing the copper wiring because the light is actually moving the data faster and more efficiently.
I know, copper's been ripping too.
Well, no. But optical is absolutely the trade. And if you don't believe that optical is the trade, Nvidia earlier in the year announced $2 billion deals with Lumentum and with Coherent because they understand that's where you have to be. Last point is also keep in mind, and this is not confirmed as of yet, but the FCC consideration in terms of limiting Chinese imports of optical is obviously going to turn us more reliant on U.S. optical that plays right into the names like Cisco, like Corning, and the others I mentioned.
Let's talk more about software. Okta today upgraded to market outperform from perform at Citizens. The cyber trade, Brian, has been really where it's at in terms of software. Mm-hmm. It had that momentary blip months ago and then has had just a strong rebound. CrowdStrike taken to 230 today from 195, also at Citizens. So they're sort of reevaluating the whole group. They take Palo Alto to 415. What do you think?
Stock's up 100%. But remember the blip. The blip came at a great time for this company because it was in the process of folding in CyberArk and everything that was happening in terms of their operations. And now Palo Alto, to us, is the creme de la creme in terms of that type of space with respect to cybersecurity. So we like the company. We've been adding to the company over the last few months, and it's our core holding in that space.
You have some?
CrowdStrike, Fortinet, Palo Alto, cybersecurity. That was the dominant theme as software was entering this corrective phase. And even as we've now witnessed other parts of software come back and have the mean reversion recovery, cybersecurity is maintaining the strength, and it's attributable to the fundamentals and also the fact that if you are a CTO, you are not cutting the budget as it relates to security.
We're starting to get more conversation that software has some legs, that this rebound is not punk.
No, I was just going to say that. I mean, we heard so much about both software and business services, this AI disintermediation, and what I think was overlooked or under-acknowledged by the market is that the companies that are outside of the technology sector that are going to be integrating and implementing AI, they are accustomed to utilizing the software that they have on their desktop today. They want that software to be enhanced, improved, created greater efficiency by introducing AI into that software, not necessarily upsetting their entire stack, especially large Fortune 500 businesses, Scott. They don't have the opportunity to just tuck something entirely new in. So they're going to rely on software providers, perhaps at lower take rates in terms of annual revenue, but they're going to rely on their software stack in this AI introduction and implementation that they're going to have to achieve.
How about this space, Bryn? Software.
I think that Microsoft, a week and a half ago when their earnings was a game changer. And so I think that puts a ton of support. It's obviously a big position of IGV. And I do think that we're all starting to understand, especially with these open weight models, whether Meta can be successful, that's yet to be seen. But these open weight models is that ultimately these LLMs become commodities. And you do need a trusted application layer, which is where the margins are. And so I think that you're going to continue to see IGB specifically make these higher lows, which is great for the chart. And I think it creepies, up there for the remainder of the year. But I think that I was frustrated with Microsoft. I think it was a game changer to say this, software application layer is here to stay, and there'll be winners and losers. But I do think IGV, because you have a little bit of everything, is a decent way to play the software space if you don't want to have an individual, risk of one single name.
I'm going to maintain a degree of skepticism until I hear from the three names in software that I think the problems exist most.
Salesforce.
At the end of the month, we get Salesforce. I think August 26th. September 9th, somewhere around there, is Oracle, and the following day is Adobe. Let's hear what each one of those reports are all about before we get this enthusiasm that a return to software in totality is warranted.
Do you think those are equally important? Because I would think about Adobe in maybe a different context of that, just given the narrowness and the creative aspects of that company that might be unseated more so than a Salesforce.
I was thinking the same thing.
Yeah,
I was going to say, sir. I thought you were going to say ServiceNow.
No, I actually think ServiceNow of those four is probably the best positioned, and that's.
So you're not as concerned about that.
The stock doesn't reflect. I mean, the stock has bounced nicely over the last month, but that's about the only green you're going to find if you look at it, at least on my fact set.
Yes.
Quite literally.
Yeah.
Week to date, it's down in the course of what's been a decent bounce. Over the last 1 month, yes, it's up 15.5%. Year to date, red. 12 months, red.
I feel as though the trouble has been, and ServiceNow is challenged for sure, but I feel as though the real trouble is specifically related, and it all began 1 year ago with Oracle, and then it trickled down and it went to Adobe and it went to Salesforce. So I'm maintaining this disbelief.
So is Oracle the number one problem child? And
I think so.
So
Absolutely.
Is that the one that needs to provide clarity in terms of getting out of the penalty box?
Candidly, Brian, I'd like to go 3 for 3. I'd like to hear something really good from all three of them universally, and that will shift my sentiment.
Okay. Let's talk about financials for a moment, because you put out a note today. The good folks at Humulus were working all night on this note, and they said today that they're buying into the rebound in financials.
We are.
Why?
Well, we wrote the report because we knew that you would really appreciate that today.
So I appreciate that. I do.
It is
really
all about Wapner today. And
Thank you.
This is This is a sector that we think, you talk about earnings, the next great earnings win, aside from tech, is going to be financials. And we're going to see rates moderate. We're going to see spreads continue to increase, but more from a thematic perspective. You see the really big banks and the really small banks doing well. But the broker-dealers are a great business, and that's why we highlighted Bank of America and Goldman Sachs in terms of the two stocks in focus with respect to where and why we own those names. We think there's a long runway here in financials.
And if I remember correctly, didn't you either sold or you trimmed Regional Bank yesterday, right?
Fifth Third.
Yeah, Fifth Third in our value portfolio because we are up 30% in the name. We're really worried about their loan book for the next couple of quarters, but we're already 32 or 33% financials in our value portfolio. So we just added to a couple of our more favorite names.
My take is JP Morgan continues to break out. If we could show a chart, I think JP Morgan trades to an all-time high today. Bank of America, very quietly, I probably fail in mentioning this name enough as it relates to the money center banks. I tend to focus on Goldman Sachs and Morgan Stanley, JP Morgan, but it continues to work higher. And Brian, you pointed out yesterday, I thought it was excellent as we talked offset, just about the value in the wealth management business for Merrill Lynch. Really strong.
Remember we talked also offset. All the good stuff is off. That's really good comments come, when the cameras aren't on.
Maybe you should bounce off right now.
See you later.
If you're not going to
Good night, everybody.
If you're not actually going to deliver when your mic is
Not
open.
really. I mean, I get so nervous on air. But if you think about how they communicated their second quarter earnings, think about how much talk there wasn't about wealth management because they were talking about net interest margins, commercial bank, the investment bank, the deal flow. The creme de la creme, I think, in all of these major banks, it's going to be wealth management the next 6 to 9 month period.
These guys deliver, by the way, their best stuff during the actual hour of the program.
I'm still a rookie compared to these two. I mean, honestly.
I don't know, man. Should we do it this guy? The hook?
The hook?
The hook.
Wow.
Okay.
Executive producer says the hook.
See you later, kid.
Go to the bullpen. Go to the bullpen. All right, coming up, speaking of sports, a bombshell basketball.
Okay, so that was the first segment from CNBC halftime report. By my count, there are about 13 stocks there in total that were mentioned. And as usual, we're going to examine each and every single one of them using the Ichimoku cloud system. So we're going to start off by looking at Broadcom, which is on the screen in front of you. So if you're new to the channel or you've forgotten or you need a refresher, we're just going to go through the Ichimoku indicators. So this cloud here represents the Ichimoku cloud. We've then got the future Ichimoku cloud sitting at the back here. We've got this blue line here, which is known as the Tankan-san line, and then we've got the red Kijin-san line, which travels in tandem with the blue Tankan-san line. Then this lime green line here at the back is known as the Chikou span line. And in case you didn't know, these candlesticks here, and indeed here as well, that represent the current price action. So let's get into it, shall we? So the first thing that we notice about this stock is the position of the price action compared to the current Ichimoku cloud. So the fact that the stock is trading beneath the Ichimoku cloud is indicative of a bearish setup. The other thing that you'll notice as well, which is confirmation of the bearish setup, is that the Chikou span line, or the lagging line, is trading beneath the historic price action. And again, this in tandem with the fact that the stock price is below the current Ichimoku cloud is again the hallmarks of a bearish stock. You'll also notice as well, which is another red flag, that the price action is trading below both the blue Tankan-san line and also the red Kijin-san line as well. Now, the reason why that's significant is because the blue Tankan-san and the red Kijin-san, they offer areas of support. They offer a level of support for the stock. And if and as you can see, around about here is where the price action has broken through with this red candle here. And again, the fact that it's got no support is a red flag because it could mean that the stock could start trading down further. There's no indication that the stock's going to turn bullish anytime soon. You'll also note that the future Ichimoku cloud is red and it is flat. It is trading in a sideways trajectory. So again, this stock has poor prospects in the short term, and if you're a bullish trader, it's probably one to avoid for the time being. If you're a bull, ideally what you'd want to see is this price action start challenging the red Kijun-san and the Tenkan-san line and pierce the bottom of the cloud and start trading above the Ichimoku cloud. You also want to see the blue Tenkan-san line ideally to move in an upwards trajectory, and also the future Ichimoku cloud as well to be green and start moving in an upward trajectory, an upward pattern. Once those Ichimoku indicators have been accomplished, once they've been achieved, and then only then would I consider buying the stock if you are a bullish investor. Okay, so next up, moving on then to Micron stock. As you can see, we've analysed this stock quite recently. So overall then, this is let's make sure that's on the 1 month chart. So as you can see, this is a clear bullish stock. So again, looking at the current price action, it is significantly above the current Ichimoku cloud, and that bears all the hallmarks of a bullish stock. You'll also note that the blue Tenkan-sen line is trading above the red Kijun-sen line, which again is a point in favor of the bulls. And the current price action is trading above both the blue Tenkan-sen and the red Kijun-sen line. Now, the reason why that is important is because if they both act as areas of support for the stock, so one would hope that the blue Tenkan-sen line would act as an area of support for the stock should it start to trade in a downward trajectory. And if the stock was to pierce the blue Tenkan-sen line, then again one would hope that the red Kijun-sen line was able to act as an area of support for the stock before it starts to touch upon the Ichimoku cloud itself. Once, if it was to fall beneath the Ichimoku cloud and start trading beneath it, then that is confirmation of a bearish stock. And for those reasons, it's obviously got quite some way to go before it does a complete turnaround. You'll also note that the future Ichimoku cloud is green and it's on an upward trajectory. So again, that's another point in favor of the bulls. You'll also note as well that Sanko span line A here and Sanko span line B are pulling apart. So when those two lines start to pull apart, what it does is it creates a thicker Ichimoku cloud for the future. And the reason why that's important is because a thicker Ichimoku cloud acts as a greater area of support for the stock should it pierce the blue Tenkan-sen line and the red Kijun-sen line. You'll also note as well that the Chico span line, the lagging line, is trading significantly above the historic price action. So again, this is another point in favor of the bulls. Another thing that I like about this stock, another point that's quite favorable about Micron is the distance between the Tenkan-sen line and the Kijun-sen line. So if you're a regular on the channel, you'll know that once that blue line rolls over that red line, it is a bearish indicator. Obviously, the further the two lines are apart, then the less likely that is to happen. So I'd say overall, Micron bears all the hallmarks of a bearish stock. It doesn't really have any, I wouldn't say it's got any bearish indicators for the time being. The only one negative, I'd say the cloud here, Ichimoku cloud here is relatively thin, but as advised, it does look like it's expanding and getting thicker. Okay, next up is Nvidia stock. So again, this is another semiconductor, very similar market to Micron, although except Micron's more memory. Nvidia also announced some major news yesterday as well, which has probably impacted the stock. I mean, you look at the trajectory of the Ichimoku cloud; it's on a fairly decent uptrend, although you would note that recently it has started to trade more sideways. Anyway, getting into it then, you see that the current price action is trading above the Ichimoku cloud, which is one of the strongest bullish indicators you could get using the Ichimoku system. Another positive for this stock is that both the price action is above both the Tenkan-sen line and the Kijun-sen line. And again, the reason why they're important is because they offer that added area of support should the stock start to downtrend. Again, as similar to Micron, we also like the fact is the distance between the Tenkan-san line and the Kijun-san line. So whilst it is not as spaced out as much as Micron, you can quite clearly see that the trajectory of the Tenkan-san line is moving in an upward pattern. Again, the further the lines are away from each other, the less there is of a dreaded crossover. You'll also note as well, another point in favor of the bulls is the future Ichimoku cloud. So whilst recently it's been red and it's been flat, you'll see that you should be able to see on here that Senko span A line here is pulling away from Senko span B. And as those two lines pull apart from one another, what they do is they create a green thick cloud. So that is a positive sign of things to come. And then lastly, we've got the Chico span line here, which is trading above the historic price action. And again, that's another point in favor of the bulls because that is confirmation of that bullish setup. So again, that is probably another bullish stock. I think they report earnings in the next 2 weeks or so. Next up is Super Microcomputers, which I think reported earnings. I think it was either yesterday or earlier in the week. So again, looking at those Ichimoku indicators, the current price is trading above the Ichimoku cloud. So yes, a tick in for the bulls. The stock is trading above both the Ichimoku indicator Tenkan-san line and the red Kijun-san line. So again, should we see a pullback, one would hope that the Tenkan-san line and the red Kijun-san line can act as an area of support for the stock. Next up, we've got the future Ichimoku cloud here, which is green and is moving in an upward trajectory. So again, that confirms the bullish nature of the stock. And then lastly, we've got that all-important Chico span lagging line, which is trading above the historic price action, and that once again confirms the bullish nature of the stock. Something else to watch out for as well is the volume at the bottom of the page. So you can see that that runs in tandem with this massive spike that we've seen here. A lot of volume with the buyers stepping in. At present, we haven't actually seen a pullback, but I think given that the stock has moved from $31 to $37, so an increase of $6, I wouldn't be surprised if we was to see a healthy pullback sometime soon. And we'll see whether the current price action can test that Tenkan-san line and whether the buyers will hold that line or whether we'll see a bit more of a pullback. Okay, so next up then, we're going to take a look at CoreWeave. So CoreWeave is an interesting stock. So we actually bought this, I think, around the $90 mark quite some time ago, obviously before earnings. We've held it throughout. So today, I think it's up by about 16, 17, or even 18%. So again, using those Ichimoku indicators, the current price action is trading considerably above the current Ichimoku cloud. Again, the hallmarks of a bullish stock. We've got the fact that the Tenkan-san line is trading above the red Kijun-san line. Again, another hallmark of a bullish stock, and the fact that also, as discussed with the two stocks, the price action can use the Tenkan-san and the red Kijun-san line as an area of support should there be a pullback. You'll also note the future Ichimoku cloud itself is green. At the moment, it's relatively flat. Sorry, not flat. It's actually quite thin, as you can see. But what I also notice as well is that the Senko span A line is starting to pull away from the Senko span B line. And when that happens, what it does, it creates a future, thicker, greener Ichimoku cloud. And again, the reason why that's important is because should this stock later pull back and penetrate the blue Tenkan-san line and the red Kijun-san line, then the outer perimeter of that future Ichimoku cloud will act as an area of support. And the chances of the stock pushing all the way through the cloud to come out somewhere at the bottom are relatively small, especially if we have a large Ichimoku cloud. We also note the Chico span line here as well is trading considerably above the historic price action. So again, that is another tick in the bull column. Moving on to SpaceX. So again, this has done quite well today. Current price action currently trading above the Ichimoku cloud. So again, that's one of the strongest indicators you can get of a bullish stock. You'll also note that the future cloud on this particular stock is moving in a sharp upward trajectory. But also notice as well how thick the cloud is. Look at Sanko Span A compared to Sanko Span B. And this is exactly what we've talked about in the other videos. Look how thick that green cloud is. And what that means is, again, to illustrate a bit better, that if the stock action here was to pierce the blue Tenkan-sen line and the red Kijun-sen line, then this big thick green cloud here will act as a great area of support before it can pierce the bottom of the cloud. So again, these are all points in favor of the bulls. I also like the fact is that you can see the trajectory of the current price action. It's moving similar to the blue Tenkan-sen line, which is used as an area of support. You also like the fact that you've got the blue Tenkan-sen line is trading above the red Kijun-sen line for now. And also the fact is that the Chico span line is trading significantly above the historic price action, confirming that bullish trend. One thing that I'm not overly keen on with this stock, I've mentioned quite a number of occasions before, is that it's subject to geopolitical commentary and also Elon Musk as well. So it does have the tendency to be a bit erratic. What I don't like is, so the fact that the Tenkan-sen line here is trading above the red Kijun-sen line is indicative of a bullish stock. But once that blue Tenkan-sen line rolls over that red Kijun-sen line, then that's a massive point in the favor of the bears. So what we don't like about this stock is how close the two lines are trading next to each other here. Now we've already seen a few crossovers. In fact, we've seen a crossover here, but also here and here and here, all within the past couple of sessions. So it does have a tendency to spiral out of control a bit. And in fact, you'll notice that the historic price action was trading beneath the historic Ichimoku cloud over here. So again, that's confirmation of a historic bearish stock. That's now changed, obviously. But the point being that Tankan-san, Kijin-san relationship is definitely something worth keeping an eye on with this particular stock, just by how close those two lines trade together. Next up, Cisco Systems. So this is a stock which I don't think we've discussed historically on this channel. So I think they are reporting earnings today after the bell, or if not, they've already reported earnings. Anyway, looking at the current Ichimoku system, their cloud, this here is the Ichimoku cloud, and you'll see that the stock price at one point was trading above the cloud, but we've then seen a pullback here. And what's happened is it looks like that side of the Ichimoku cloud has been used as an area of support almost. And the stock is almost trying to reclaim the top of the Ichimoku cloud, although not very well because there has been a piercing of the cloud here. So this is one of those stocks that's almost in between. I think it's a neutral to bullish stock. The reason why I say that is because the price action looks like it is trading above the Ichimoku cloud, albeit ever so slightly. You've got the Tenkan-sen line here, the blue Tenkan-sen line, which looks like it might be being used as an area of additional support for the stock. And that Tenkan-sen line is on an upward trajectory. Here is the edge of the Tenkan-sen line here. You'd also know that the blue Tenkan-sen line is above the red Kijun-sen line, which again is one of the hallmarks of a bullish stock. We've also got the fact that the future Ichimoku cloud is green, albeit it is trading in is quite flat at the moment. But again, as I discussed on some of the stocks, you can see that the Sanko Span A line is moving away, pulling away from Sanko Span B. And what that does, it's going to create a large green future Ichimoku cloud that will act as an area of support. One thing I don't like is that the Chica span line is trading beneath the historic price action, which is indicative of a bearish stock. So it does have points from both the bears and the bulls here, but predominantly the bulls. So I would say that this is a bullish to neutral stock, which may well turn soon, and it will all depend upon whether the stock can hold above the current Ichimoku cloud here. Next up, we've got Corning Incorporated. So again, as before, here is the current price action trading above the Ichimoku cloud, confirming the bullish nature of the stock. We've also got the fact is it's trading above the blue Tenkan-sen line here and the red Kijun-sen line. So we've got good areas of support for the stock should it pull back. Another thing I like about this particular stock is the trajectory here of the blue Tenkan-san line is moving up sharply, confirming the bullish nature of this stock. We've got the future Ichimoku cloud as well, which is moving in an upward trajectory, albeit at the moment it is a bit flat. Again, one thing I do like about this particular stock is that the Seeker span A is pulling away from Seeker span B, and what that does is it creates a much larger Ichimoku cloud, future cloud going forward that can offer additional support for the stock. We've also got Chica span line A trading above the historic price action, which again confirms the bullish nature of the stock. Next up, very quickly then, because we've got a lot to go through. So next up, Okta. So no, this is a, I will provide a bit more detail on this because it's unlike some of the stocks. So you see, first off the bat, it's trading inside the Ichimoku cloud. And what that tells us is, this tells us is this is a neutral stock. It's reached an equilibrium. We don't know if it's going to start trading below the cloud or above the cloud. We simply do not know. It's not yet told us which direction it's going to move. So in addition to the fact that the stock is trading inside the cloud, the future Ichimoku cloud is green, but it's also quite flat. We've also got the fact that the blue Tenkan-sen line here, whilst it is trading above the red Kijun-sen line, it is pointing in a downward trajectory. So there's every possibility that there's going to be a crossover here. I also don't like the fact that the Chica span line here is trading below the historic price action. That confirms the bearish nature of the stock. So I think this is a case of wait and see. Next up, we have Meta. Again, this is a bearish stock. What you'll first notice is the price action compared to the current Ichimoku cloud. There's a significant gap between the two, the price and the cloud. You'll also note the rollover here of the blue Tenkan-sen line crossing over the red Kijun-sen line. These are all the hallmarks of a bearish stock where we have the Tenkan-sen trading below the red Kijun-sen. Also, future Ichimoku cloud, it's red and it's moving in a downward trajectory. Again, hallmarks of a bearish stock, and you've got that all-important Chica span line trading below the historic price action, confirming the bearish nature of this particular stock. Next up, CloudStrike very quickly. Again, this is one of those stocks that's sort of in between, similar to Okta that we've just analysed it because it's in the same industry. So again, price action trading on or just about to enter inside the cloud. So again, that's your first red flag for this particular stock. We've got the red Kijun-sen line trading above the blue Tenkan-sen line. And we've got that dreaded crossover which has occurred here. So again, these are all the hallmarks of a bearish stock. You've got the future Ichimoku cloud here, which is flat, trading in a sideways trajectory. Again, bit of a red flag. And then lastly, you've got the Chica span line trading below that historic price action. Next up, Adobe. Similar as before, bearish price trading well below that Ichimoku cloud. You've got this dreaded crossover that's occurred here, and now you've got the blue Tenkan-sen line trading beneath the red Kijun-sen line. Again, these are all the hallmarks of a bearish stock. You've then got the future Ichimoku cloud, which is red and is moving in a slight downward trajectory. And then you've got the Chica span line here trading beneath the historic price action. So yeah, this is certainly a bearish stock. Probably want to swerve for now, but again, we're not financial advisors. Next up, we have ServiceNow, which is again interesting because this is actually you can actually see the support levels unfold right before your eyes. So starting with the current price action is actually down here, but we're going to actually start by looking at where it was previously. So it was previously here, and it was using the blue Tenkan-sen line as a level of support. There's then been a breach here of that blue Tenkan-sen line. It started to trade beneath that line. It's then used the red Kijun-sen line here as a level of support, and that's exactly what it's supposed to do until recently where there's been a significant sell-off, and now it's trading beneath both the blue Tenkan-sen line and the red Kijun-sen line, so it's lost that area of support. And what we've got then is it's now using the Ichimoku cloud here as a level of support, and this is indicative. This is one of the reasons why we like to have a future Ichimoku cloud which is thick and green, because once that support level's lost, this is the only area of support the Ichimoku cloud before it starts trading beneath it. So the next question then is whether that stock can hold, whether that support can be maintained on the side of the Ichimoku cloud, and whether the stock can start maybe reclaim the Tenkan-san and the Kijun-san line, or whether it's going to fall into the cloud and then trade directly below it. So that's quite interesting. Another thing I don't like about this particular stock is that the blue Tenkan-san line is trading beneath the red Kijun-san line. There's been the dreaded crossover here where we've seen some quite a large candle here which ties in with the selling volume at the bottom of the screen. We've also got the Chico span line here trading beneath the historic price action. Again, all indicative of a bearish stock. Lastly, we've got Oracle Corporations. So this is taking a bit of a turn recently, a turn for the better, should I say. So again, starting with the current price action, which is here, trading above the current Ichimoku cloud. So that's certainly a point in favor of the bulls. You've also got the fact that the blue Tenkan-san line is trading above the red Kijun-san line. Again, one of the hallmarks of a bullish stock. And both of those lines are trading below the current price action, acting as a level of support for the stock. The future Ichimoku cloud is green and is moving in an upward trajectory. So again, that confirms the bullish nature of the stock, as does the fact that the Chico span line has now reclaimed the historic price action. Trading above that action is one of the hallmarks of a bullish stock. So again, this is certainly a stock to watch out for, because I think there's quite a lot of scope for us to go a lot higher because it's seen so much of a sell-off over the past few months. So all in all, it's definitely a bullish stock, but trade with caution because it has got propensity to pull back. Okay, let's move on to the next.
So some calls of the day. Wolf today says they love the setup on McDonald's. Belsky, they say it's one of our favorite setups after a stock has suffered a significant drawdown. It's a weekly oversold signal at support coupled with a bullish inflection in momentum. Now, you didn't, thankfully, say anything about McDonald's off camera. So now you have to deliver your best stuff on.
Church mouse off camera. The real concern on McDonald's is that the same people coming in, they call it renewed traffic, is down less than 1%. So they need to try to find a way to crank that up. They're really working more on the app. Their sales are pretty flat, and the international side was a little bit light. So they've got a new focus on the U.S., Scott, and we think that there's going to be strong growth the second half of the year here.
You buy this turnaround in Target because B of A today, you own the stock. B of A reiterates underperform. Okay, they do put the target at 124. It's at 153. Okay, the stock is up 56.5% year to date. It's up more than 13% over the last month.
Yeah,
they're not believers, obviously. Are you?
We own it in one portfolio, so that kind of tells you the come on. But we prefer Walmart.
That means
here.
You like it, by the way.
We prefer Walmart more here. So we do think this is the first full year of the new CEO. He's done a great job operationally to turn the company around. That would be a name that is on our list to trim, Scott.
Okay. See, let's just cut to the chase and get to that then. You know what I mean?
Just trying to add a little bit more.
I understand, but if you own it in one portfolio, that means you like it. If you own it in 20 portfolios, maybe that means you love it.
Okay.
Okay.
Thank you for clarifying that.
Well, I mean, our viewers are sitting there like,
come on, Belsky.
Again?
Yeah. I get it. I get it.
All right. Hilton, coming right back to you. You're on the hot seat, dude.
I love it.
You are on the hot seat. Upgraded to buy. The target 365 from 360. How many portfolios do you have this in?
One.
Does that mean you?
Well, it's a mid-cap.
Well, it got upgraded, so.
It's a mid-cap name, Scott. RevPAR numbers are higher than Marriott. Marriott had a tougher quarter. From the FIFA perspective, they've actually outpaced Marriott with respect to what they saw. So Hilton, we think, is a great play on the healthcare space, or a hotel space. I'm sorry.
It's your unlucky day. I know you're a little bit flustered now, but
I know.
I'm coming right back to you.
Please do.
Lowe's.
Yes.
The target cut to 262 from 281. Home Depot target cut to 344 from 346.
Yep.
What's the story?
Lowe's is down 11% year to date. Home Depot's flat. Home Depot's done a better job with their integration of their new properties. Lowe's not so much. And so we think that there's an opportunity there to see increased earnings growth from some of their new M&A activity that they've seen in the last 6 months.
All right, they're telling me to go to break, but I'm just coming right after you.
Come on.
TJX outperformed Telsey ahead of earnings on Wednesday. Joe owns it, but I'm coming right at you.
5,200 stores around the world. There's still a runway to continue to grow that. This is a counter-cyclical play on the consumer that has great products. And we think if people are going, we talked yesterday about some consumers going downscale. This is the best way to go downscale as the consumer.
Integris upgraded today, target 200 at Deutsche.
You know what they do? They make the gas that goes into the components that make chips.
Okay.
That's why it's an AI play, and that's why from a demand perspective, this company is firing on all cylinders.
General Dynamics, that's you. Top picks, Wells Fargo.
Robotics.
Joe owns it too, but I'm coming right at you.
Robotics. This company is done from the robotics side and the defense side. We think that from a revenue perspective, this company is going to continue to beat.
Boeing on that list also. You got that.
Boeing, everyone's favorite stock to hate last year. This company continues to have new orders go up. We're flying more, especially on the international side. Their orders from the CEO perspective, this is another company that has done a great job in terms of balance sheet management and cash flow.
All right. Control room. I'm sorry.
Come on, give them a financial man.
minds. Deservedly, they're losing their minds. They tried to get me to go like 2 minutes ago, but this had to be done.
I know, I get it.
All right, we'll come back.
Okay, welcome back. That was the second clip from the CNBC halftime reports, whereby they discussed about 9 stocks by my count. So we're going to get into it first by looking at McDonald's. Again, as a quick reminder, this is the Ichimoku Cloud. We've got the future Ichimoku Cloud here, the blue Tenkan-san line, the red Kijun-san line, and then this lime green line at the back is the Chico span line, also known as the lagging line, and then these candles here represent the current price action. So again, this is target, apologies, not McDonald's. So this target stock here, as you can see, this stock sits above the Ichimoku Cloud, so that's a positive indicator for the bulls. We've also got the future Ichimoku Cloud as well, which is thick and green. I think this stock is probably in the middle or about to start a transition. The reason why I say that is because it's bullish, but there are a few red flags here. Number one is that the Kijun-san line is trading above the blue Tenkan-san line. So we'll have to wait over the next couple of sessions as to whether that blue line is going to roll over the red line. You've got the Chico span line back here, which is currently sits above the historic price action, which is one of the hallmarks of a bullish stock. But it's whether it can hold above that current price action. Can hold above that historic price action. We've also got the future Ichimoku Cloud is no longer trading an upward trajectory, and it's now trading sideways. So again, I would not be surprised if we see a pullback in the in the future. Next up, McDonald's. Again, this looks to be a bullish stock. We have the current price action trading above the current Ichimoku Cloud, all the hallmarks of a bullish stock. We've got the blue Tenkan-san line trading above the red Kijun-san line, and the historic Chico span line trading above the historic price action. These are all indicative of a bullish stock. The future cloud, however, it's red and it's trading in a horizontal pattern. So again, not ideal. You see that the Senko span line A here does appear like it's about to start to separate from Senko span line B. If it does, that should create a larger Ichimoku Cloud, future cloud, which will offer that additional level of support should we encounter a pullback. So as outlined on the CNBC report, McDonald's is definitely a bullish stock for the time being, probably one to keep an eye on. Next up, Walmart, again very quickly. This is again a bullish stock. Look at that price action compared to the current Ichimoku Cloud. Again, look at the trajectory of the future Ichimoku Cloud. And as well, we've got that thick green cloud is rising. You've also got the Chico span line trading above the historic price action, and the blue Tenkan-san trading above the red Kijun-san, with a good trajectory for the blue Tenkan-san. Hilton stock, again, bullish, looking at that. Future Ichimoku Cloud as well. Blue Tenkan-san trading above the red Kijin-san. Chica span line trading above the historic price action. Home Depot, wow, okay, so this tells a bit of a different story. You see that the current price action is trading significantly below the Ichimoku Cloud, which is the hallmarks of a bearish stock. You've also got this dreaded crossover up here, where the blue Tenkan-sen line is crossed over the red Kijin-sen line, and now we've got the position where the blue Tenkan-sen line is trading below here. The red Kijin-sen line confirming that bearish outlook. Future Cloud is red, and it's on a very minor downward trajectory. Lastly, Chica span line trading below the historic price action. Laos, similar. We've got the current price action trading below the Ichimoku Cloud. Future Ichimoku Cloud is red and it's on a downward trajectory. Blue Tenkan-sen line here trading below the stock, albeit only just, and we've got the red Tenkan-sen line here trading above the blue Tenkan-sen. So we've got that dreaded crossover here, confirmation of the bearish nature of the stock, and the Chica span line trading below the historic price action. Lastly, last but not least, we've got Boeing. So this is quite an interesting stock. Currently trading below the Ichimoku Cloud, all the hallmarks of a bearish stock. We've also got the fact that the price action is below the red Kijin-sen line, and it's just penetrated the blue Tenkan-sen line. Future Cloud is red, flat, with a slight downward pattern. Previous Chica span lines, lagging line trading below that historic price action, confirmation of a bearish stock. Okay, let's move on to the next clip.
Center power stocks have had a huge year. I think everybody knows that at this point. For example, Vertiv's up 81.5%, Quanta 63, Vernova 58.5, Eaton 46, even Caterpillar, right in the mix there, has been a 50% gainer. So you had a couple of events. Caterpillar got downgraded a couple weeks ago at Baird. They said, quote, state and local regulations could further limit the ability of hyperscalers to deploy CapEx, potentially impacting future orders backlog progression. Okay, that's talking about the data center build out. New York has the data center moratorium. Texas is pausing connecting data centers to the grid until there is an audit. Recent polling has suggested, at least one poll that we saw, 71% of people oppose data centers, right? It's this not in my backyard debate. If they're not in somebody's backyard, they're going to be in another one, however, which is why people haven't gotten too negative on the stock performance from here forward. I'm wondering what we think. Joe T, you have Vertiv, you have Quanta, you have Vernova, and you have Eaton.
Just recently sold Caterpillar at the last rebalance, and that was related to debt to equity. We own 22 industrials. These are the top 4 performing industrials. If you're trying to make an investment decision based on the note that you just read, I would first turn to utilities, and I would step away from ownership of utilities. I still think we're in the process of building out these data centers while there are some regulatory obstacles ahead. And if we're continuing to build that out, manufacturing is going to continue. It's going to support the revenue growth that we're seeing. The 4 companies that we own in the most recent quarter, revenue growth above 20% for all of them.
Bank of America with a note today, Belsky. They say everything's bigger in Texas, including the political risk. Texas has been one of the country's most constructive data center markets, but that position is now at risk. They highlight specifically in their basket of names within the risk, CenterPoint, which you own, CNP, most exposed to the current uncertainty. What do I do?
Well, they're in the Houston area too, which Bryn knows a lot more about than I do.
I know, but you own it.
I do. So
you're stepping into it again.
I know I am. So
did such a good job too.
I know. Anyway, this stock from the growth perspective, it's
crawled through.
I'm not going to be
500 miles of.
I know.
Smelling
sludge.
foulness I can't even imagine.
I'm not going to be
and you
pulled
emerged
down by,
on the other side. You put your hands in the air. The rain was coming down.
It literally was. I'm not going to let the political environment dictate.
Sheriffs are circling.
I'm not going to let the political environment dictate what I know about this about owning a company. We think the data center side of the CenterPoint is going to be very, very strong, and the demand going forward is there.
That was a Shawshank reference. Did you get it?
Oh yeah, I got it.
All right, we're
get
back.
busy living or get busy dying, Scott.
All right. Wow. You notice that too? All right. Tom Lee, Stephanie Guild, Courtney Garcia, Sherry Paul, Jeff DeGraff, Malcolm Etheridge. We'll have more on that Lakers sale today as well. Floor managers getting aggressive, yelling at you, raising his voice at us. Belsky, what's your final trade?
LPL Financial, play on the independent channel.
Bryn.
DRAM and sell the October 60 calls, collect 460.
Shan.
Healthcare.
Joe.
JB Hunt.
Bill, you want one? I mean,
Okay, so that was the third and final clip from CNBC, focusing on Vertiv, Caterpillar, and CNP. So starting then with Vertiv Holdings, very quickly then, refresher of the Ichimoku indicators. We have the Ichimoku cloud here. We've got the Kijun line here, the Tenkan-san line here, current price action here, future Ichimoku cloud here. And then this green line here is the Chico span or the lagging line. So using the current Ichimoku setup, you'll see that the price action, how it corresponds with the current Ichimoku cloud, sits above the cloud, and that confirms that the bullish nature of this stock. We've also got the fact that the price is above the red Kijun-san line. So the Kijun-san is acting as an area of support. You'll note, which is a positive, the fact that the blue Tenkan-san is above the red Kijun-san is again one of the hallmarks of a bullish stock. So the blue Tenkan-san line, as you can see, it was acting as an area of support for the stock, but very recently here, it's pierced the stock and it's now trading beneath the blue Tenkan-san line. So it's lost that layer of support. As advised, the next level of support will be the red Kijun-san line. Future Ichimoku cloud is it's green. It was on a slight uptrend, but it's now flattened out somewhat. The fact that it's fairly thick, it's not super thick, but it's fairly thick, so that will add a extra layer of support should the stock price continue to fall and pass the red Kijun-san line. We've also got the Chico span line here, which is above the historic price action. And what that does, it confirms the it confirms the bullish nature of the stock. Overall, then, this is a stock, a bullish stock, but the fact that we've recently seen the piercing of the blue Tenkan-san line that was the previous level of support, and the fact that you see quite a bit of a dip on the Tenkan-san line pointing downwards. It may well be that we're seeing a reversal or the midst of a reversal. We've also got the Chico span line here, which is starting to move in a downward trajectory. Next up, Caterpillar. Okay, so this is an interesting stock because it's one of the few stocks that we've analysed where the stock price is currently sitting inside the Ichimoku cloud itself. Now, as advised previously, when the stock is inside the cloud, it's neither bullish nor bearish. It's reached an equilibrium. It is neutral. So we have to wait over the next couple of sessions to find out what direction the stock is going in. As it stands, I would say that this current stock has got the hallmarks of a neutral stock, which is about to turn bullish. The reason why we say that is because whilst the stock price is within the Ichimoku cloud, the blue Tenkan-san line is still above the red Kijun-san line. You can see the crossover there, and that blue Tenkan-san line is acting as an area of support for the stock. Also, you'll note that the Chico span line is trading above the historic price action, and we've got the future Ichimoku cloud has started to turn green. It's no longer red. It was moving in a downward trajectory, but is now starting to flatten out slightly. And you see that the Sanko span line A is moving, pulling away from Sanko span line B. Putting all that together, we've got the fairly neutral stock, but there are some of the hallmarks of a bullish stock in the mist. So we'll have to wait for the next few sessions to find out how that plays out. Lastly, we've got CNP, so Centrepoint Energy. So again, similar to Caterpillar in that the current price action is within the Ichimoku cloud itself. It's coming from a bearish position because it was previously trading below the cloud. So the next few couple of sessions will be paramount because we'll have to see whether that price action can continue to push its way through the cloud and potentially trade above the cloud over here. One of the things I do like about this particular stock, though, is whilst the price action has just pierced the bottom of the cloud, it's pierced the bottom of the cloud, the blue Tenkan-san line is clearly acting as an area of support for the stock. You see that it's followed exactly the same pattern as the blue Tenkan-san line, And if that blue Tenkan-sen line can hold, then over the next couple of sessions, it could offer further support and take the stock through the Ichimoku cloud. I also like the fact that the blue Tenkan-sen line is trading above the red Kijun-sen line, and there's been a crossover over here. And the Chikou span line is now trading above the historic price action, confirming the bullish nature or the bullish reversal of the stock. You'll also see ever so slightly that Chikou span line A is starting to invert. And if we get that crossover and an upward trajectory, that would also confirm the bullish nature of this stock. Okay, that's it for today. Tune in again tomorrow for another video. Thank you.